Anyone following Wall Street and the financial markets will recognize the name Dick Bove, the sometimes controversial, outspoken, but famed bank industry analyst who, after a distinguished 50-year career, retired last year. Dick has been called a gadfly, and more. Dick has made some bold predictions in his long career that have proven correct. Some have proven wrong, but Dick is always thought-provoking and doesn't pull punches. And while he's retired in Florida, he's still busy writing a book, staying close to his large family, and now at 84, in a rare interview since his official retirement, he's speaking out again. Dick Bove, welcome.
Thank you, John.
Well, let me just go on here. And we're going to get into a lot of topics. We're going to dig deep, Dick. In a moment, we will cover a lot of stuff that's on your mind, from the US economy, the Federal Reserve, cryptocurrency, the future of the US dollar, President Donald Trump, Elon Musk, and of course, banks, which you say are being eclipsed by unregulated lenders in the private equity space. Dick, an interview you had with the New York Times in January last year opened by saying, over your 54-year career, you perfected the art of grabbing attention. I guess that was a compliment in many ways. The story was headlined, "A famed analyst's final forecast is the fall. A famed analyst's final forecast is the fall of the US economy." So let me add, Dick, that you've made some grim predictions. You've made other kinds of predictions. Many of them have proven right. Is the US economy's collapse imminent? Where do you stand on that 1 year or so later?
Well, I think the financial system of the United States is lost its footing, and I think that as that becomes more evident, it is going to have a tremendously negative impact on the economy. So, what I'm assuming is that the fall of the economy, when and if it occurs, is going to be driven by the problems that we're developing in the financial system, because the financial system now seems to have less and less of a basic strength, and I think that's where the risk is going to come from. You know,
Well, this
back in 2006, I was 2 years early in predicting the collapse that would occur at that time. But I wrote a piece called "This Keg is Going to Blow," in which I described the problems in the mortgage markets, how the mortgage markets were, setting up the economy for failure, and that occurred, but it didn't happen in 2006. It happened somewhat later. And I think once we get into talking about the dollar and the underpinnings of the Federal Reserve, you'll get an understanding of why I think there's risk in the economy.
Well, before we talk about the dollar, Federal Reserve, and these are your big sweet spots, because in a past life we had a podcast going with Odeon Capital, and we spoke about that. So I'm excited about, diving into that, Dick. Um, Stocks in general, where do you see the market, your overall take? Because that is a measure of something. It tells us something. The market has been pretty hot, notwithstanding the tariff wars and the volatility in the market, but it seems like an upward trajectory. And to me, sometimes it seems really odd given all our big macro problems.
Well, I think that the reason why I wanted to talk with you today is because my guess is that the analysis of the market is has not been, if you will, driven by the right theories, right? In other words, if you would ask anyone in the industry or anyone in the business press, if uncertainty exists, can the market go up? And they'll say no. They'll say that tremendous uncertainty creates tremendous problems in making investments, and the market will not perform well if there's uncertainty outstanding. The second thought that if you went to an average person or a specialist, a pundit, concerning the stock market, and say if interest rates go up on a consistent basis, can the market go up? And they will come back and say no. That can't happen because the returns on stocks, have to adjust to the returns on the overall financial system. And yet we've seen over the last 12 months a tremendous amount of uncertainty. We're dealing with a tremendous amount of uncertainty at the present time. And yet the market, after it had this one dive early in the year, the market is doing quite well. In fact, the market keeps bouncing. It's not doing that well today,
Yeah.
but it keeps bouncing off, all-time highs. So, why do people believe that an improvement in, I'm sorry, that uncertainty, will derail the market when in fact we know that it's not derailing the market because we certainly have more uncertainty right now related to the position of the government, the economy, et cetera, than we've had for some time. Secondly, if we go back to when, the market was charging nothing for money, in other words, interest rates were at 10 basis points, we saw that rise from 2020 up to about 580 basis points on the Treasury bill. And both the market and the economy went up. In other words, every time you turn on television, they say, well, this rise in interest rate is restraining the growth in the economy. Well, it hasn't for the past 4 years. So if market uncertainty is not I'm sorry, economic uncertainty is not the driver of the market, if rising interest rates is not the driver of the market, what is it? What is making the market go higher? And my argument is and has always been cash. In other words, money. And if you're going to buy 100 shares of NVIDIA, you need cash. You need money to buy that stock. And if there's a huge flow of funds into the economy or into the financial system, the market will go up. And my belief is that there has been a staggering increase in the money supply of the United States and of the world, and that increase in money supply is what's driving the market higher. And therefore, if the market is going to continue to move higher, there has to be a continued increase in cash flow. And if it's not going to go higher, it's going to be because something has inhibited cash flow so that those funds cannot flow into the purchase of stock. At the moment, we do not have the slightest clue. The Federal Reserve doesn't have the slightest clue. The pundits don't have the slightest clue as to what the money supply of the United States is. They don't know how to count it. They don't know what it is composed of. They don't know where it exists. And therefore, we're operating in the blind in terms of being able to predict the future. And maybe the reason that the Fed keeps saying that, they're driven by recent events as opposed to having a core theory as to why the markets are moving in one direction, or inflation or the economy is moving in one direction or another. But the bottom line is we don't know where the money's coming from. All we know is that it's coming in huge amounts, in trillions of dollars, and that's what's driving the market.
Well, you've been a frequent critic in the past of the Fed, especially during COVID, all the printing of COVID money that ultimately fueled all the inflation we saw in the economy. And then, of course, we saw a rise in interest rates, and no let up on that, although we will know later this week where interest rates are headed, or we'll get some kind of an idea. So you're saying that we've no idea on the size of the US money supply?
Yeah, we don't have the slightest clue. And the reasons are very, very clear to delineate. The first, if we take a look at the Federal Reserve and we ask, how do they count money? Well, they take a look at the amount of currency that's outstanding, actual physical dollars in the hands of the public. They take a look at how much money is sitting in the banks, but only certain money in the bank. In other words, if the deposit in the bank is less than 100,000, the Fed calls it money. If it's above 100,000, the Fed does not call it money. if the money, was sitting in a bank account, $50,000, and that's moved into an institutional money market fund, we don't count it money any longer. So just taking a look at the methodology that the Fed uses to count money, they don't count most of the money out there. That's number one. Number two, the money supply which is counted is heavily dependent upon cash in banks, the deposits in banks. All right. But basically, the banks are losing market share in terms of holding on to the cash in the overall, financial system. You've got money market funds, which has skyrocketed in size. You've got basically mutual funds, which are holding large amounts. In other words, the banks right now have $22 trillion in assets. The pension funds have 28 trillion. Insurance companies have 15 trillion. The broker dealers have 6 trillion. We're not counting any of this stuff when we're trying to take a look at the financial system. We're not counting it when we're trying to look at where are the loans coming from. In other words, we don't know how much money the private sector is, private equity firms or mutual funds are lending into the economy. We have a rough idea of it, and there are certain entities that try to count it, but they don't know what it is. We don't know, how much money really is coming in from overseas or not coming in from overseas in given times. But so what I'm saying is the system has become so huge, it's become so enormous that we're not counting the money in the banks properly. We're not counting the currency properly. We're not counting cryptocurrencies at all. We're not counting, the money that emanates from institutional money market funds. We're not counting, the money that may be in, the insurance companies or other, private, financial entities as part of the money supply. And we're not counting how much money can be created by these entities in determining what is happening with money flows. All we know, using the stock market as an indicator, is that that number is going up, and it's going up relatively rapidly. So that's a
Yeah.
long-winded way of telling you. I just don't know nobody knows what the money supply of the United States is.
Well, I know we spoke in the past couple of days about your concerns on lending, where the money's coming from. You mentioned the US banking industry, which has been eclipsed, overshadowed by private lenders, the private equity side. Is there any good number that the Fed uses for the amount of dollars in circulation, leaving aside all the other trillions in wealth, but just US dollars getting circulated globally and domestically? Any kind of a number that we cotton onto?
Yeah, the Fed puts out a number of $21 trillion.
Hmm.
They claim that the money supply of the United States is $21 trillion. But unfortunately, because it's not counting all of these other things that I mentioned, $21 trillion is not the money supply of the United States. The money supply of the United States is significantly larger than that. And the Fed, isn't able to tell you how fast that money supply is growing or not growing, because basically they're not counting, the money. For example, if money flows into institutional money market funds, they
Hmm.
don't count it.
Yeah.
If maybe $100,000 was a good change point, 30 years ago in terms of bank deposit. If you've got 100,000 in the bank, it's considered to be too big to be counted as part of the money supply. But that's not true anymore,
Hmm.
because the wealth of the American public has grown by trillions of dollars over the last 3 to 4 years. I mean, it's up $8 trillion, I think, since 2021, 2022, and that money is not being counted fully by the Federal Reserve. But the answer to your question is the Federal Reserve claims that the money supply of the United States is $21 trillion.
Now, complicating this picture if you will, is the role of cryptocurrencies is something which recently you have kind of started to look at. I know you're in retirement, Dick, but you think broadly and deeply about a lot of these topics. And you had this conversation with me about crypto, and you had some concerns, and one of them being that the evolution of crypto as a currency, as a medium of exchange, perhaps, could ultimately undermine and hurt the US dollar, which we know is a reserve currency.
Yeah, well, in terms of proper disclosure, I do own some cryptocurrency, so I'm not a non-believer in cryptocurrencies. But I think, to answer your question as to why there's such a risk to the United States financial system, you have to understand what the United States financial system does. All right. The United States government has the dollar. That's the product that they make in the financial area. They produce dollars. They create them. For every $1 that they create, they make a profit of maybe 99 and a half cents because basically they don't make them in physical form anymore. I mean, the dollar is not a piece of gold backed by a piece of gold. It's not backed by silver. It's not even backed by paper. It's backed by electronic blips on computer systems, right? So the net effect is it's a very profitable business for the United States called seigniorage. It's very profitable business of the United States government or the Federal Reserve to create dollars. All right. Now those dollars are demanded by the whole world. In other words, and this gets, I'm going to take a couple of side tracks before we get to the main point again. But if we take a look at the entity that creates these dollars and makes all this money creating these dollars, the Federal Reserve, we find that that entity is, if it was a private company, bankrupt. Why do I say that? For the last 10 quarters, the Federal Reserve has lost money. Now it's only losing $5 to $7 billion a quarter right now, but a few years ago it was losing $20 billion a quarter. All right, so it's taking in less in interest income than it's putting out in terms of the creation of these dollars and putting out in terms of the money it's paying on the stuff on the money it has borrowed. Secondly, if we take a look at the structure of the Federal Reserve's balance sheet, what we see clearly is that it has, in real terms, it has negative net worth of close to $1 trillion. Now, again, it was worse than that a few years ago, but it's roughly $900 billion at the present time. So the entity which is creating those dollars is losing money, number one, and number two, doesn't have any equity in its business. If it was, again, a commercial bank, a financial entity that we, look at and monitor, money market funds, insurance companies, what have you, we'd have to say this thing was bankrupt. However, the United States government is able to cover the losses of the Federal Reserve, or the Federal Reserve can print dollars itself to cover its losses. But think about it. We now have a money supply that we don't know what the size of it is, number one. An entity that creates this money that is losing money every day, and is got no real equity. And that's the basis of what is now the world's reserve currency. The world's reserve currency is the dollar. Now, we get away with this situation where the world reserve currency is the dollar simply because no one can come up with any alternative. In other words, the Russians and the Chinese are working very hard to replace the dollar with their currency, the yuan, right? The Europeans have the euro to replace the dollar. And the cryptocurrencies, are attempting to replace the dollar. All of this stuff is trying to replace the dollar, but none of it, is in better shape than the dollar is, okay, in terms of having solid backing behind it. So again, point one, we don't know how much money's out there. Point two, we're using the dollar as the proto example of what a currency should be around the world, and there's nothing really behind the dollar. I mean, if you go to the Federal Reserve, it says on the dollar, it says this is a note of the Federal Reserve, and you say, okay, that's a loan. This dollar is a loan to me, or to you, and you say, I want to cash this loan in. What are you going to give me for this dollar, which is a note? And what they don't have anything to give you.
Well,
There's no gold behind it.
right. I mean, it's a fiat currency. I mean, the concept also is that the majority of the world's transactions, 60% or more, are conducted exchange. The exchanges are done in US dollars, and it has arguably the most political stability, and it's the only game in town. Who wants the your Russian currency or the euro to be the exchange rate? But how does crypto fit into any of this debate? Should it be mentioned? Because there are a lot of proponents pushing the crypto as a new currency. Even our president has taken very strong positions on crypto. And it's worth reminding our listeners that before President-elect Trump had previously told Maria Bartiromo of Fox News that the United States government could use Bitcoin to offset at that time, the $35 trillion national debt. Without going all over the place and digging ourselves in some kind of a hole here, crypto was looked at as some kind of a savior, and the president is pushing it. You've got a lot of big companies out there pushing crypto, and you have stress on the US dollar, and you have this notion that maybe eventually we'll be able to pay our taxes in crypto. Your thoughts?
Well, see, that's the point. In other words, what I'm trying to demonstrate to you is that there's nothing behind the dollar, right? There's nothing other than the
Mm-hmm.
goodwill of the world to use it, because there's nothing else that basically has been able to replace it. The cryptocurrencies were created to replace it. It's the desire of the creators of the cryptocurrency to create a currency which would not be prone to inflation, which would be limited in size, and basically now that's kind of out the window a little bit, because there's so many cryptocurrencies out there that you may not want Bitcoin, so you want Ethereum. You may not want Ethereum, so you want XRP or Litecoin or one of these other coins. So the issue is, what is the world going to use as their currency? Are they going to continue to use the dollar, or are they going to use cryptocurrencies? If they decide that they want to use cryptocurrencies, then they're going to use less dollars. And if they're going to use more cryptocurrencies and less dollars, then the United States government has a problem, because it funds
Mm-hmm.
itself with dollars, and it
Exactly.
can print the dollars that it needs to fund the debt. They can't use cryptocurrency to fund the debt. In other words, basically, if people want to accept cryptocurrencies, from the government instead of the treasuries. In other words, if buyers out there say, I'm not going to buy treasuries because the treasuries are backed by the dollar, but I will use cryptocurrencies. And if the US government is the creator of those cryptocurrencies, just the way China has created its own cryptocurrency, the government can use that money to pay the debt. All right. But the point is, we don't create cryptocurrencies here. We have not done anything to create cryptocurrencies here. And therefore, you mentioned President Trump. He's got a problem in the sense that, on one hand, as the president of the United States and as the person who has the biggest impact on what the budget of the United States is, he needs the dollar to be solid. He needs the dollar to be accepted so that people around the world are willing to buy treasuries to pay the debt of the United States, because they want the Treasury to back their currency because they want dollars to function in the marketplace. On the other hand, he has a number of entities which he has invested in, which are backing cryptocurrencies. In other words, I think Forbes magazine is saying that some $3 trillion of his wealth, or some 60% of his wealth, is in cryptocurrencies in one form or another. So now, and he made $57 million last year, according to USA Today, in terms of his profit on his cryptocurrency holdings. Plus, he's seen the total value of those holdings, according to others, rise by $1 billion. So now, here he is. On one side, he's got to protect the dollar because that's how he gets the United States debt paid, right? On the other side, he's making a literal fortune in the cryptocurrency market. But the two markets cannot coexist because they're both attempting to do the same thing. They're both attempting to allow transactions to occur in the market. They're allowing countries to pay for their debt. So if you push the dollar, you're inhibiting the growth of cryptocurrencies. If you push cryptocurrencies, you're inhibiting the growth of the dollar. If you're on top of the system that creates the dollars, and presumably next May he will have control of the Federal Reserve, you have a requirement to protect the dollar. If your personal holdings are 60% backed by cryptocurrencies, you have a strong desire to protect cryptocurrencies. So the question becomes, which one is he going to do? At the moment, he's moved heavily in favor of the cryptocurrencies. He's made the head of the SEC a strong proponent of cryptocurrencies. He's made the head of the Commodity Futures Trading Corporation, the CFTC, is a guy who once ran a cryptocurrency fund. He's suggesting that the United States government set up some sort of fund or reserve fund, which would allow the United States government to buy cryptocurrencies. And if, as you said, and nobody suggested this yet at this point, if the desire is to have cryptocurrencies to be available to pay your taxes to the United States government, then you don't need the dollars. You don't need the dollars to pay your currency, to pay your taxes. You don't need the dollars ultimately to pay off the US debt. You use cryptocurrencies. What then happens? It then requires the United States to pay off its dollar debt. And if it has to pay off its dollar debt, and people don't want to buy treasuries because they're buying cryptocurrencies, then we'll have a financial collapse. And it'll be a huge one. It won't be a minor one because, we don't have the money to pay back our debt. We've had Fitch, Moody's, and I forget the third one, Standard and Poor's have all downgraded the dollar, right? Mm-hmm. And everybody thinks it's a joke that they downgraded the dollar, but they've downgraded the dollar because we do not have enough money to pay the interest on the debt, and the interest on the debt keeps going up. So again, if Americans don't want to buy the dollar, they want to buy our treasuries, and they want to buy cryptocurrencies. If foreigners don't want to buy the dollar, they don't want to buy treasuries, they buy cryptocurrencies, how does the United States fund its economy? And that means they're going to have to raise taxes. We've seen numerous examples over the years of nations that lose the ability to lend money, to borrow money in the open markets. And the only resolution they have is to shrink their economies and increase taxes dramatically. And that's why I say that would be the source of a collapse in the economy.
Of course, when you talk about crypto, there are all kinds of cryptocurrencies, Bitcoin, stablecoin, and so on, and they all have different permutations. Some have a limited supply, others are linked to the US dollar. You've praised Trump privately for some of his policies, but you seem to be suggesting here on crypto, you see a conflict of interest. But before you answer that, Dick, an interesting number: donations by crypto companies ran at $4.6 million in the 2022 election cycle. 2 years later, the 2024 election cycle, that was up to $119 million.
Yeah.
Some commentator called it the biggest structural money change in Washington. Just a phenomenal number. But to my question, while you have, single out some of Trump's policies as being good for the economy long term, you see some kind of a conflict of interest. He wouldn't be the first president to have conflicts of interest or alleged conflicts of interest. Let me rephrase. But your thoughts?
Well, as I mentioned to you in other conversations, George Washington had this huge conflict of interest because he kept buying land in Western Virginia, and he kept buying land into the Ohio Valley, and the United States did not own that area. So he kept advocating that we move west, and ultimately the nation took that theme up in a manifest destiny. But the point is, you're right. There have been every president going back to George Washington who may have had some type of conflict in terms of their personal income, wealth, and their ability to protect the United States. In the case of Donald Trump, it's the biggest one ever. All
The
right,
biggest in scale and nominal dollar terms, everything. This is the largest uh, conflict of interest by
yeah,
any president.
to my knowledge, and
Yeah, okay.
according to figures which have been put out there and released. Remember, he's got a $3 billion position, which is 60% of his wealth. And again, just so this is not an anti-Trump thing. I mean, I do believe, that he's doing a lot of very, very good things. I think his move on trade is exactly correct. I think his ability to make the government slimmer and more efficient is correct. I think his desire to make Europe pay for its own defense is correct. I think his recent statements about making Iran surrender so that they don't have it, all that is correct, right? So, there are other things he's doing in terms of human rights that I don't think is correct. But basically, as a president, he's doing a lot that's right, a lot that's going to help the United States and its economy. And he's doing things that are not,
And on tariffs, you support his tariff moves?
that's the trade thing. In other
Yeah.
words, at the end of World War II, the whole world was busted. There was no country that could produce anything because their economies had been shattered and destroyed, except for the United States. So the United States made a decision. I mean, President Truman and I think it was Secretary of State at that time, George Marshall, the head of the U.S. Army during World War II. I mean, they decided that they would let the United States lose money in order to build economies in Europe and elsewhere around the world. And they set up all of these agreements in which the United States was on the wrong end of the trade agreement. The problem is nobody's changed those things. Nobody has taken a look at the excesses that now exist, except for Trump. And Trump is stepping up, and he's forcefully, by using tariffs as his weapon, if you will, he's forcing a change in the trade balance. We've got ongoing negotiations with numbers of countries, which will last for 2, 3, 5 years. But he's going to change what the Marshall Plan did so that the United States has a fairer position in the economy. So I think in that regard, he's been absolutely correct. But he does have this conflict of interest on cryptocurrencies, and he is stacking the government with people who are in favor of cryptocurrencies, like the head of the SEC, like the head of the CFTC. So I'm repeating that. And if the United States ever says, you can pay your taxes with cryptocurrencies, it's going to be an enormous attack on the dollar. It's going to be an enormous attack on the ability of the US Treasury to raise funds to pay the debt, and taxes are going to have to go up dramatically, hugely, and that's going to cripple the economy.
Well, Congress has looked at this, right, as at a crypto bill, and so where is that headed? Could that evolve his position more strongly?
Well, I call Congress the Muppets. The Muppets may do whatever he wants here, but they may at some point decide that they've got to protect the dollar. There's no indication that they even understand why they have to protect the dollar. In other words, they don't understand the fact that the dollar is backing other currencies around the world, that you buy oil or nickel or corn in dollars. You don't use other currencies to do it. They don't understand that if the United States has the dollar, it can force other nations to do what it wants. I mean, we've got sanctions against over 30 countries around the world, because we're not letting them have access to the dollar until they do what we want politically. We've used the dollar as a weapon. So if the Muppets decide that they want to pass some legislation which weakens the dollar, which weakens the position of the dollar in the world, it is going to harm the United States dramatically. At the moment, the difference in size between this money supply, which we don't know what it is, and cryptocurrencies is enough that it's not a threat. But again, if we get to the point where we say we want to have a reserve for the United States in cryptocurrencies, if we want to have people to have the ability to pay their taxes in cryptocurrencies, it's going to have a massive effect on the financial system, none of which will be beneficial to the United States. It will be beneficial to the president.
Your thoughts on the very public spat between Elon Musk, the world's richest man, and Donald Trump? Elon contributed a huge sum for Trump's election, 292 million to Trump and his, some Republican candidates. He rolled out the green carpet, let's call it, green representing dollars. Um, and he uses social media and his strong influence to get Trump elected. And then we had this bizarre turn where Elon turned against Trump. And now we've been led to believe it was both political and both personal. Elon didn't get what he expected, having spoken into Trump's ear that he wanted this, he wanted that, he wanted to get one of his handpicked um, friends in some position, into a position at NASA. And then there were tax credits and other stuff going on. We may never know fully what triggered this row, but how? What's your thoughts on it? How could it damage the economy? Because now there are some people, Steve Bannon, for example, talking about deport Elon Musk, and Trump is has having this very icy relationship with Elon at the moment, although he's distracted by other big issues out there.
Well, the United States cannot afford to have these two men at odds with each other, and I don't want to say who's right or who's wrong on either side because it's immaterial. It doesn't matter. What matters is that Elon Musk is now being pilloried by the press. He's being called all sorts of names related to his personal habits, etc. And as I say, as you said, as just mentioned, Steve Bannon wants him deported, right? Uh, I think people have to step back and take a more objective look at what's going on here. And they have to start by taking a look at SpaceX. There are right now, and the number keeps changing almost daily, but there's roughly 15,000 satellites that circle this planet, the Earth. 10,000 of them were put up there by SpaceX.
Mm-hmm.
SpaceX, is got a software company which operates the system, And SpaceX, or Elon Musk, or whatever you want to call it, they have the ability to dip into information in the middle of the Atlantic Ocean, in a cornfield in Siberia, and no one else in the world has that. There's no entity that can produce as many satellites as SpaceX does. In other words, if you take all of the entities in the world that create satellites, China, Russia, Europeans, Microsoft, other companies, Blue Angel, and I don't remember, Virgin America, whatever. They none of them have produced as many as 1,000 satellites. This company, SpaceX, has created 10,000. If we make the decision that we want to raise taxes on SpaceX's, that we want to cut the government uh, contracts with SpaceX, who's going to replace them? There isn't anybody to replace them. It'll take 3 to 4 years to replace them. And let's assume, that, in crypto, we talked about far off possibilities, paying your taxes with crypto. What if they actually were to deport Elon Musk? Is there any country in the world that wouldn't welcome this guy with open arms immediately?
Mm.
Wouldn't they fight each other to offer him things to come there? And which is the country that can offer him the most? Clearly, it's China, because
Mm.
Tesla builds slightly under 1 million cars a year in China. So Musk knows what the, if you will, production capabilities of China is. He knows how the Chinese system works. He knows that the Chinese love him. The Chinese are not going to attack Elon Musk the way he's being attacked by the press in the United States today. And it just has to stop. It has to stop, because there are no winners if these two guys don't, if you will, come to a cooperation or a cooperative situation again. And what would hurt first is, the American space program, because we're relying on SpaceX to make that space program work. What would hurt is defense companies, even in the stock market, because of what Musk does in terms of giving information to countries as to where troop movements are and what's happening around the world. So what's happening here makes no sense, and it can't continue. And the risk of it not continuing is got to be taken away, because the impact on this country would be so bad that we would take 3, 4, maybe 5 years to eliminate it. But there's another risk which is not being thought of, which is being mentioned but not thought of. In 1992 and 1996, Ross Perot was the second richest man in the United States, and that means I think he was the second richest man in the world. He made the decision to run for president. Now, he got tremendous support initially until he started
Mm.
articulating his views. And when he articulated his views, he lost public support. But he did change the election. He did change who could win and who would lose the election. So now let's take us up to Elon Musk today. Let's assume that he has no desire to run for president, but that he makes the decision that he will put, I don't know, $10 million into people running for Congress in 2026. And he does it in every state in the United States. Or maybe he puts 20 million or 30 million. He certainly has the money to do that. And he gets, I don't know, he puts up 50 candidates, one from every state, and he gets 20 of them elected. Who's now running the United States government?
Mm.
The Democrats can't pass any legislation because they got to get the 20 votes that Musk controls. The Republicans can't pass any legislation because they got to get the 20 that Musk controls. So again, whether you love him or whether you hate him, and I don't love him or hate him, I think he's a brilliant man that has mental problems, maybe here or there. But the fact of the matter is, he is in such a strong control position now against the United States government, its aerospace program, its ability to elect people in the House of Representatives, that they can't continue to have a negative impact between the two of them. It can't continue.
You see the US government continuing to support his enterprises because it's in the national interest to do so?
What choice do they have?
Mm,
Let's assume they say, okay, we're going to close off all our contracts with SpaceX. We're not going to give them any contracts. Who's going to replace them?
mhm, mhm.
There's no country that can replace them. The British are not going to replace them. The French aren't going to replace them. Chinese are not going to replace them. What company is going to replace them? So the US government cannot say we're going to stop doing business with Elon Musk. And Elon Musk has got much more than what we just spent. I mean, he's got his I think Grok is his artificial intelligence
Yeah.
language. He's doing breakthrough research on tying the brain to computers so that you can, who knows, take care of Down syndrome, take care of, you can give people sight who have lost their sight.
Mm.
He's doing things which are
It is
so
remarkable.
beneficial. Yeah, you can't take off against this guy because he happens to take off and say things that don't make a hell of a lot of sense. I mean, he's too important to this country.
Well, based on his past statements and his positions, he's unlikely to back Democrats even in swing states. So that leaves maybe supporting, a third party or or Republicans who are, not MAGA Republicans, as it were, and, follows kind of his thinking on a whole range of issues. Because he has made it very clear that on a lot of the Trump policies, he's completely on board. He thinks the Democrats have gone way too far left.
Yeah, if he were to create a third party, he should. There would be just two issues, which the public would respond very positively to, and which I think make a lot of sense. The first issue is, to get rid of the deficit and to reduce the size of government, get rid of big government, get rid of regulations. The United States is government, it's not 250 years old the way the army is, but the United States bureaucracy is 250 years old and no one has ever cleaned it up.
Mhm.
I mean, so it has to be filled with so much, waste and mismanagement and corruption and maybe even thievery. So that would be one of his campaign approaches. The second campaign approach has got to be to get rid of the deficit
Mhm.
and to take on really restructuring so that the United States, I don't know if they got 36 trillion or 38 trillion dollar deficit, the deficit is taken care of. I think all Americans would respond to that. And I said two, but I'll give you a third thing. The third thing he can run on is the Gini index. The Gini index shows that the disparity between the wealthy and the let's say average Americans in the United States is one of the worst in the world. And if I would tell you to make a guess as to which country the Gini index is closest to outside the United States, you'd never guess the country. It's
Well,
Haiti.
I think I know Haiti.
Yeah, it's Haiti. Yeah, you know
Mm.
it, John. Yeah, it's
Yeah.
Haiti.
Mhm.
So, in other words, to go up with a two-pronged approach, we're going to get rid of big government and government waste, and the we're going to decrease the disparity in wealth in the United States. Who again in the United States is against either one of those things?
Well,
I,
I will say here, Dick, and you can pick it up if we're not exactly comparing apples to apples when we're talking about the US and Haiti. I mean, Haiti is a completely um, messed up, corrupt, um, in the global south, third world, whatever, choose your nouns, adjectives. Whereas, I would rather be on the lower end of the Gini coefficient in the US than in Haiti. At least I'd be getting food
well, yeah,
stamps,
obviously,
welfare, and so
obviously,
on.
yeah, obviously, I would too. And I'm not trying to say that that the social system in the United States, that the legal system, that the financial system is anything like Haiti. All I'm looking at is all this thing measures, all the Gini index measures is the disparity between the wealthy and the poor. That's all it measures. It doesn't
Mm.
say anything about whether, it's a dictatorship or it's a democracy or it's an oligopoly or who. It's just these guys at this country make so much and the people underneath them make so much. These guys in this country make so much and the people below make so much. And when you compare the United States with other countries around the world, we are more like Haiti than Sweden or Germany or France or England or countries like that. Not even China or Russia is in Haiti's position.
Now, I know you're a proponent of free enterprise, open markets, and so on, and less regulation. Um, but that's interesting, the Gini coefficient. If you look at where we're at, so we have this maybe the 1%, and then we have all this massive gap, the disappearance of the American middle class. Um, it's been put out there. It makes sense that the rich, the billionaires became handsomely richer during COVID because of all the COVID money spending, because their stock portfolios and bailouts of big companies. Does that, in hindsight, look like a blunder, a bad policy decision by the last government and carried on by its successor governments?
Well, President Trump started if you will, that type of giveaway, and President Biden enhanced it and increased it. And if that was not done, Trump was absolutely right, and so wasn't Biden. If the money was not handed out to the public at the time it was handed out, we would have run an incredibly sizable recession. But I think the reason for the disparity to a great degree is our tax system, and there is a belief. And I want to switch a little bit to talk about Reagan versus Clinton. There's a belief that if you increase taxes, you kill the economy. If you decrease taxes, you increase the economy.
Hmm.
That's being argued in the Senate right now. And if you take a look at these two presidents, and let me give you three facts. All right. Fact number one: Ronald Reagan becomes president, he cuts taxes. Bill Clinton becomes president, he increases taxes. Fact number two: the economy under Ronald Reagan grows at 3.6% per year throughout his term as president. The economy under Clinton grows at 3.8%, which is virtually the same thing, but it's a little bit better. Fact number three: at the end of Reagan's administration, the United States was broke. And even though President Bush one had to say, read my lips, et cetera, he had to increase taxes dramatically. At the end of Clinton's administration, we had a massive surplus,
Yep.
biggest surplus in the history of the United States. And Bush number two took that surplus and gave it back to the public. So this whole argument of if we just decrease taxes, we're going to stimulate the economy, or if we increase taxes, we're going to kill the economy, it is not correct according to history. All right. But what's being missed in both of these administrations is capitalism. I
Hmm.
mean, we don't need the government to have the economy grow. We need capitalism to work for the economy to grow. Capitalism worked under Reagan. Capitalism worked under Clinton. Capitalism has been working for the last 5 years. A year ago, this was considered to be the most exceptional economy in the world because capitalism was working here. So, I mean, the whole thing of this big government and arguing about taxes and fighting with guys like Musk, just ridiculous. Just get the government out of the way, let capitalism work, and the United States will do just fine. And it has done just fine, letting capitalism work going back, I don't care how many hundreds of years you want to look at it.
Well, just picking up on that real quickly, and we'll move on to something else, Dick. So you're not a proponent, I think, of the Laffer. Am I pronouncing that right? The Laffer curve, the trickle down economics.
I haven't seen it work.
Okay.
In other words, if someone can come up with a bunch of statistics which shows that it works, and that's why I took, Reagan versus Clinton, because
Okay.
the whole trickle down theory was for the basis of Reagan's tax cut,
Mm.
and supposedly Clinton went to Greenspan, who was the head of the Federal Reserve when he became president, and he asked Greenspan, according to Woodruff,
Mm.
he asked Greenspan, should I increase taxes or not? And what will happen to the economy if I increase taxes? Supposedly, Greenspan said increase taxes, right?
Interesting.
And he increased taxes, and it didn't hurt the economy at all.
So this is the evidence as you see it. Apparently, I don't know if this is an anecdote or it's true, but Leifer apparently sketched out his curve on a napkin over lunch or dinner.
Yeah,
So don't know if he was drinking at the time. I'm not making a pro or con about it, but I do have to mention one thing about Bill Clinton. Um, he did propose and institute the welfare to work program, which, in other words, take more people. In other words, to get a government handout, you had to you had to go to work. There were more conditions laid down, and we've kind
yeah,
of eased off on that. Interesting. And it's today almost like a more Republican position, but he was a centrist, of course, Bill Clinton.
yeah. Well, that's got to be Musk's argument when he starts his third party, which essentially is, people have got to work. Handouts from the government is not the way capitalism works. It's not what made this country's economy grow over the last couple of hundred years. And so, I think that, Clinton is not the only guy who said that. I mean,
Hmm.
there's a whole bunch of other people who said it
Hmm.
also,
Hmm.
mainly Republicans. And I think it's true. People have got to work. I
And
think
I know
I
you're
don't
not.
believe 65. I think people should not retire at the age of 65. I think that's absolutely incorrect. It makes no sense whatsoever because when they created the Social Security program under President Roosevelt, it was not meant to be a pension plan.
Hmm.
It was meant to be salvaging people who were, going to be indigent because they needed some money. Now, because people live to be so long, I looked at it the other day. I guess 78 years old is on average. It's become a pension plan.
Mm.
And it's the young people who are paying for that pension plan for the old people, and it doesn't help the economy. I think people should work well into their 70s.
Well, you're a living example of that, Dick. You retired officially, but I think you're still keeping so busy. You're writing a book and you're keeping close to your family. You might mention a bit about the book before we close shortly. You worked up to 83, which is just kind of remarkable.
Well, yeah, but I loved what I was doing. I mean, I had the benefit of really enjoying work. But basically, as you say, I decided to put everything aside and work on a book for the next 3 years. It's going to take 3 years to complete it. And what I'm trying, the book is about uh, who would win in a confrontation between China and the United States. And it approaches the subject by going all the way back to the nature of mankind, in the paleo, you say the word for me, paleo times, all right, the evolution of man. And it goes through how mankind has never been able to solve its problems without going to war. Whether it's the Hittites against the Egyptians or, World War II or what have you. And it goes into, what makes the countries who win win and the countries who lose lose, and it then comes to a decision that if the two countries were to go to war today, the United States, in my view, would win hands down. If the two countries go to war 10 years from now, I think it's an open question.
Well, we'll come back to your book sometime. You're working on it, and another many more years. When will you have it completed? Because I do want to get into banking now, Dick.
Yeah, no, it takes me 2 to 3 months to write a chapter,
Okay.
and there are 19 chapters, so there's a long, long time.
Well, it's very exciting. Um, In 2023, Silicon Valley Bank, there was a run on the bank, and then the regulators had to step in. They weren't properly capitalized. Then other banks, all hell broke loose. And it was a very nerve-wracking period. People were worried about their bank deposits. How are the banks now? You mentioned that they're being eclipsed, overshadowed by private equity, these lenders who are not regulated, which is a scary thought.
Mhm.
How is the U.S. banking system? Because you covered that for years.
Yeah, yeah. No, I unfortunately I haven't looked at a bank statement for 15 months, so I can't tell you, you know, on a nitty-gritty basis how they look. But I would say that the United States banks at the present time are the best hope of salvaging the financial system because they do have to operate in a highly regulated environment. They have run into all sorts of difficulties over the past couple of hundred years, which we've kind of worked out by putting up regulations which make sense. And I don't, I was totally against, the Dodd-Frank bill, but I think that, the banks are regulated properly. I think the American banks do an excellent job in terms of assisting the economy and assisting the financial system. I think that, the big difference is, that, these banks are looked at by the government, to determine whether they are making good or bad loans, whether they are, in fact, doing things which are unacceptable in the financial markets. The fact that they have lost market share in the financial markets means that the other side is not being looked at. Then no one's looking at the loans that they're making. No one's looking at what they're doing in the financial markets, except in a very broad sense.
Hmm.
And now the SEC doesn't even want to do that. It wants to look at cryptocurrencies. But so I think the American banking system is one of the bright spots in America. And I'm not saying that because I'm prejudiced, but I do think that you've got safety and soundness there that you don't have outside the American banking system.
Any sense of the breakout on the lending by the US banks versus the private sector? Is it a 50-50, 40-60? Any general kind of numbers on that?
Well, again, we don't have the numbers.
Hmm.
We have people who are suggesting that the banks are, on the more on the 40 to 40,
Hmm.
40% side, but we don't have the numbers, so we don't know.
Yeah, and which raises another question. If we did have a recession or a financial crisis, um, that could raise issues on the non-banking side.
Well, that's right, because then money would flow. Whenever you have a recession, money flows into the banking system because of the FDIC guarantee, right? So money would flow into the banking system and it would flow away from all of these private sector companies because there is no guarantee there. And they would not be able, if they had a number of their uh, sector companies go under, then basically the money would simply be lost, and that I think the next recession, when it occurs, is going to be a really bad one.
Dick, you spent, according to the New York Times, who wrote a lot of newspapers wrote flattering and wonderful articles on your retirement. New York Times one was just a massive piece. They said you worked at 17 brokerage firms over a 54-year career. So,
Yeah.
with that kind of experience, what are some of your final thoughts here you want to share before we wrap up?
No, no, no. My final thought is what I said a little bit earlier. I think that people should work almost till they die. I think the capitalist system should be enhanced and not set back. I think that we've got to start to take a very close look at the current financial system in the United States at the present time, because I think it is a very high risk system because we've taken away a lot of the protections that existed when it was just a banking system. And I think that, we're in an uncertain period that we don't know which way it's going to go at this point in time because we don't know the basics that would support. We don't know the money supply. We don't know who's controlling what. We don't know the value of the loans. We don't know a whole series of things that we need to know. So again, I believe in the old-fashioned system that made America work, and I think that we got to get back there.
Dick Bove, thank you.
Thank you very much, John.
You've just been listening to my interview with the famed bank analyst, Dick Bove. Dick is the author of Guardians of Prosperity: Why America Needs Big Banks, and over his amazing career worked for 17 brokerage firms, appearing on countless TV and radio shows and interviewed on podcasts, as well as being quoted frequently by major media outlets. Now, we didn't have enough time to continue Dick's thoughts on the US social security system, which we know is headed to big deficits unless we shore it up with more funds fast, nor did we have enough time to address Dick's view that Americans should work well past the standard American retirement age of 65 years for many workers, and should keep working well into their 70s at least, a leap that would have them working in the labour force hovering around their 80s. Dick made it very clear to me that there are obvious exceptions to his recommendation that Americans keep working well past 65. He says this should not apply across the board to everyone in this category, especially those who are sick, infirm, incapacitated in some way, physically unwell. I would add it should be somehow tied to personal choice. But Dick's broader point is that America needs to shore up the social security system, and it is definitely an interesting idea. You can also watch this interview on my YouTube channel, Dig Life Deep. Until the next time, I'm your host, John Aidan Byrne.
You were listening to Dig Life Deep with John Aidan Byrne. You can reach the host in the U.S. at 973-529-4699. That's 973-529-4699. 973-529-4699. Email byrnedesk@gmail.com. That's byrnedesk, B-Y-R-N-E, desk@gmail.com. byrnedesk@gmail.com. Subscribe for free.